Hey, everybody. Hi. Good afternoon. Good evening. Welcome to my podcast, Coast to Coast Credit Podcast. I am Tamiya Robles. I am the owner of Fix My Credit Now 850.com. Welcome, 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 welcome. So today we do have a special guest, and I will be interviewing, but she's still currently setting up, so I'm not going to put her on just yet. Hopefully you hear me because I see you, but nobody can see you, so don't worry. It's all good. Okay, cool. But yeah, so before she gets on, she'll give me the thumbs up when she's ready to go. But I just wanted to say, first of all, thank you to everybody who has joined my podcast, who has scheduled consultations with me. It's been a very, very busy week. And as of yesterday, I officially have 300 subscribers in 30 days on YouTube. So thank y'all. Thank y'all. I'm so glad y'all are taking it seriously. You're listening, you're taking heed, and you're doing something about it. Because, like I said, it's going to be mad real, especially as we approach the holidays. So, get as much education as possible, wise up, get your credit repaired, and if you're interested in purchasing a home, now is the time to go ahead and do that, especially at the end of the year so you can write it off for the following year. But again, I just wanted to say thank you guys and thank you for tolerating my random lives. Like, I know I get on in the morning sometimes and I just start talking and it's just random, but yeah. But anyway, I want to formally introduce my guest here. I'm gonna put her on.
Hey, how are
this
you?
I'm doing pretty good. Let me give you a formal introduction.
All
All right,
right.
so everybody, this is one of my favorite people, especially out here on the West Coast. She is a home loan advisor. Her name is Ashlynn Drayton-Johnson, and welcome, welcome, welcome.
Thank you. Thank you so much for having me. I'm so excited to share. This podcast has truly been, even the lives, okay, has truly been a wealth of knowledge and information. Like, this is stuff that I wish that I would have known even before hopping into real estate. So thank you for seeing the need and jumping in and really sharing your heart with us in professionalism. So thank you.
Sure, you're welcome, and thank
Yeah,
you for being on here.
of
I've been
course.
trying to get you on here for a while, so you
We've
know.
been planning this for a minute. So glad we were
Yeah.
able to make it happen for sure.
Yes, ma'am. Yes, ma'am. So, like my podcast is just like I said, it's usually mad, laid back, laid chill, but very informative. My the people that rock out with me, they appreciate that, and it's more responsive that way. And if you anybody has any questions, comments, we are actually live. This is not a pre-recorded live, so if you have any questions for us, just post up, and we'll answer them. But I'm going to pass the floor off to you. I would like for you to introduce yourself and let us know what you do and just,
Of
get into
course.
all of that. All right.
So I'll give y'all the long story short, but I I'm originally from New Orleans, born and raised. I'm a Southern girl, so every now and again y'all are gonna get a y'all, and that's what it is because that's where I'm from. So I started in banking and finance. It's been almost 20 years, 2000 and yeah, 2005. And it was my very first job out of high school. I fell in love with retail banking. And then when it was time for me to, like, you know how you go through your phases, you go to school, you start to look for more of that career goal oriented option. I decided to stick with banking and just kind of climb that corporate ladder, right? So we moved to California, and at that point, I'd been working for a credit union that I absolutely loved, fell in love with. But I noticed that there was a disconnect between what people knew about their money and how they should use it and what resources were available for people, right? Um, why is your bank account always overdrawn? What do we need to talk about? Why you know, why are we always looking for loans to extend loans? Like what types of decisions should we kind of make to avoid being in that place, right? More month than money sometimes. So it led me into actually getting a degree in business and then getting a master's in teaching and learning with education, because I found that, like I said, that disconnect and wanting to share the knowledge that I had gained with other people in the world. And I did that for a few years through my business, Freedom with Lynn. We offered a lot of online services to help educate others and teach them about money and how to use it and make sense of it. And then at just about kind of 2020, we decided to purchase our first home. So this was a new territory for us. My spouse and I had not purchased a home before, so we were, first time buyers. Our parents had never bought a home, so we were the first in the family to do it in that aspect. And we were buying in what I feel like was one of the most expensive states. We were buying in California. Craziness, right? So 2020 is the pandemic. So we have all that pandemonium going on around us. And we decided to get pre-qualified to buy our first house. Y'all, it was the worst experience. The worst experience. Everything that could go wrong went wrong. Appraisals, time frames, like you name it, and it happened. Deadlines, contingencies. It was horrible. So after we closed escrow, the very first thing I did was I need to learn more about how to buy a house. Like, I need to understand what this involves, how this works, and how I can share this information with other people. And that was how I ended up getting my licensing to offer mortgage loans. So that's more my focus now. And it's not just extending the loan, it's about educating people on the process, how it works, what's involved, what to expect. And even if it's not a situation where you're ready to buy right now, what steps we can take to make sure that you are ready to buy in the future. For a lot of first-time buyers right now, it's scary. Rates are higher than they were during the pandemic. Prices are higher, than they've been in the last couple years because values are high. So I've been spending a lot of time educating and teaching on what resources are available and what things can be used to make your purchase yours, because everybody's not going to be the same. Okay. It has to be unique to you and your family's individual situation. And that's my role. That's what I do, is I come in and help you figure that out and make a game plan for that.
Excellent. Thank you for that. So, yeah, can you walk us through that process? So, especially for those that are timid, like a lot of my clients, they feel they want to purchase, they're interested, but they are timid, they are unsure of themselves, they
That's
don't know
scary.
what the process is, and they think they won't qualify, especially now. So, what would you say to someone like that?
So the first step is going to be having a conversation with a professional. Call your favorite loan officer. I'm accessible in 14 states right now. I offer different loan options, and have them run through scenarios with you. Just because we look at a certain price range, or we, run through your credit and look at what's there and tell you some areas of opportunity to improve, that doesn't mean, again, that you won't ever be able to buy. If we're able to meet, and I can look at credit, look at income, look at a potential area that you want to buy in, I can tell you exactly what you would need to get approved, as well as if you're ready, which in my case, most of the time, people that don't think they're ready are actually equipped and they're prepared. They just don't know it.
Mm.
So I always suggest that very first step is speak with a loan professional, someone that you trust, so that way you can have an idea and have a game plan. Now, when you speak to them, they're going to want, like I said, income information. So you want to be as raw and as honest with them as possible. Of course, the longer job history, the better. But in this unique climate, we have a lot of options available for untraditional um, options. So for your gig workers, your delivery drivers, DoorDash, Instacart, for entrepreneurs, there are a lot of loans that are out right now that are unique to your specific job situation. So one of the popular options that I offer is something called a bank statement loan. So as a business owner, I can look at the last 12 to 24 months of your bank statements and use that to verify your income. We also have a 1099 program, which allows you to be able to provide me those 1099s that you've collected from DoorDash, Instacart, Amazon delivery, and I can use that to verify your income because you don't have a traditional pay stub, you don't have a traditional W-2 or schedule, but we can use some of those unique loan options to think outside of the box to get you approved. So in addition to looking at your income, we do pull credit. With our VA programs, we can get you approved as low as a 580 credit score. So the higher the credit, of course, the better your rate, but there are options out there for lower FICO scores. We also look at any savings that you have. So if you're putting aside money in a savings account, you have investments, you have retirement money, you can pull from any of those resources to help with down payment and closing costs. And then one of my favorite options is the down payment assistance programs that we offer to help you have money to get into the property. So there's so many factors that we look at. Again, to answer your question, my suggestion is collect your documents, ID, driver's license, income, bank statements, tax returns, and get to your favorite loan officer so we can give you the scoop on what to do.
Okay. Okay. And you said you cover a couple of states, 15 states. Is that how many?
14 right now, yes.
14 right now. Okay.
Yeah.
And is it predominantly West Coast?
So we're mixed in California, Arizona, Colorado, Georgia, Texas, Florida, Maine, Indiana, just mixed in here and there.
Okay. Okay.
Nevada.
Okay. All right. So, they should still reach out to you and take it
Absolutely.
from there. Okay.
And then if I
Now,
don't have an option, if I personally don't offer an option, I do have a network. So I can refer you out.
okay. Okay. That's cool. So now when they come to you, they have all their documents and things like that, right? What is the first thing you're going to check?
So the very first thing I'm going to look at is credit.
Okay. Credit.
I would pull
Okay.
that credit first. Yes. I want
Okay.
to make sure that everything is current. We understand that things happen and, recovery, like everybody, has a point in their life where they may have to clean up some stuff, right?
Mhm.
But we want to make sure that if you have a credit card open right now, that you're making that payment. If you have a car that you're making payments on, that those payments are current. If you're currently a homeowner and you're looking to invest maybe into another property, or pull out cash or refinance, we want to make sure that your current mortgage is current. We want to know that you can manage your bills at this point in your life.
Mhm.
So pulling credit first things first.
Now, what would you say to someone? A lot of my clients think they're already messed up. Their credit is already trash. And I always tell people it's never as bad as you think it is. And even if it is bad, we can fix it. But some people have collections on there or they'll have a repossession and bankruptcies. What is your stance with that? Like if if they're open, if they're closed, if they're new, if they're old, missed payments, recent missed payments, like what would prevent them from getting approved with those type of negatives on their credit report?
So for bankruptcies, for most programs, if you have had the opportunity to recover the last 2 years with positive history, you're golden. As long as the bankruptcy is discharged and you've been able to establish positive credit, so you have a nice credit mixture, couple credit cards, and maybe a a car loan. So you're able to show that you've been able to redeem yourself from that point at the bankruptcy, then you're golden.
Okay.
Same for foreclosure. Typically 3 years, depending upon the program. Same scenario. We want to make sure that if you've had a foreclosure since then, you've been able to recover and rebuild and reestablish yourself.
Mm-hmm.
Now, when it comes down to collections, again, those can be kind of a fine line for collections because it depends on the amount. Typically, anything $5,000 or less, we're okay. Anything $5,000 or more, of course, if it's a medical collection, we can fight that. If it's not a medical collection, then we may have to address it if it's $5,000 or more.
Mm-hmm.
So all of that to say is it is very doable. There are different options depending upon what your unique situation is. And it takes for us to kind of sit down and review your credit together to have an idea of, again, is this something we can fight moving forward, or do we need to take some steps and take a little time to work on it before we can get you approved?
Now, do you care if they're closed? Can you work with someone if they have closed collections?
Yes,
Mhm.
absolutely.
Okay, even if it's over 5,000?
Yes.
Okay. 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 So it's not necessarily deletions per se. It just needs to not show actively any sort of activity
Correct.
open. Okay, cool, cool. That makes sense. So that gives some people hope that you don't have to have a perfect credit score. You can have a bankruptcy. Now, what
Absolutely.
about missed payments? Because that, especially, so I've been pushing this FICO 10, FICO 10T. That's like a major thing. It's new. It's going to destroy so many people slowly but surely, right? But even if you aren't hit with the FICO 10T, people are going to be hit with just regular FICO 10. And
Right.
FICO 10 zeroes in on missed payments. So with missed payments and you're trying to apply for a mortgage, if it's recent, can you tell me if it's like a recent missed payment or one over 2 years? What's the difference? How do you feel about that? Is there a chance? Whatever you can give us.
So if there is a missed payment, and let's say it's been 2 years, it's a 2-year-old missed payment. Okay. The underwriters are less likely to harp on that. If it's a current missed payment, again, the goal is to show that there's been some type of recovery since the missed payment, or there's some type of explanation. There was a life experience, something that caused for you to have this perfect or exceptional payment history, and then all of a sudden there's a couple missed payments. Like, that tells a story. So as long as you're able to provide some type of explanation as to what happened, typically it's something that we can get around. Also, if we're talking about 1-2 missed payments on maybe one account, and you have, again, a very strong repayment history on everything else, then that's something that, again, I can advocate for. If 5 out of the 7 accounts that you have open have late payments, then we may have a problem, right?
Okay.
So it is more of a case-by-case situation. I also find that it's not sometimes as much the history as how the history impacts the score. So,
Okay.
like, for instance, for the down payment assistance programs, for most of them, we need a minimum of 640 FICO score, right? So I can get you approved if you're at the 620, but we may not be able to get you into that down payment assistance program 640 bracket until we get a collection off.
Mm-hmm.
So it just really
Mm-hmm.
depends, again, on that unique situation for the client.
Okay. Okay. That makes sense.
Mm-hmm.
So another thing is, so it's that now, what do you stand, where do you stand with student loans?
So student loans have been fun. So with the deferment, uh, when credit is pulled, they show zero, that you don't owe a monthly payment. So for most loan options, we're required to either use 1% of the balance if there's no minimum payment that's calculated. So what I end up doing is having clients go back to their servicer and have that conversation. Like, listen, I know I don't owe a payment, but when my deferment is up, how much is my monthly payment going to do? Because in most cases, that minimum monthly payment is going to be less than the 1% that I have to calculate as a monthly payment. Um, I the IDR program, so income based payment, income driven repayment options. I don't care if it shows. I think, I'm gonna have y'all in my business for a minute. I just got my notification from my servicer, and I have a payment that's $7.60. Y'all don't judge me, okay? But even at that amount, if I could plug in $7.60 for your monthly payment and include a letter from your servicer, that helps to keep your DTI in a position where I can get you an approval versus 1% of your balance. So again, it's not a no because you have student loans with larger balances. It's just about how we present it, how we package it.
So because I heard a couple of things, different responses. It seems like certain mortgage lenders go by their own drum, like the beat of their own drum. So I was told not to delete anyone's student loans or not to make it zero. I could delete it, but not make it zero. What do you think about that?
So I think as to the difference between mortgage brokers or mortgage lenders, all of our underwriters are different.
Okay.
So although they have like a foundation for a specific structure, there's going to be different kind of logics of approval for the different underwriter.
But with you though, what with you?
With
me,
yeah. Mm-hmm. With me specifically, I think if the issue is we're concerned about the DTI for the client, deleting it is a good option.
Okay.
Right. If DTI is not a concern and we just need to calculate that minimum monthly payment, then just have them. We can't do a zero payment because it won't allow us. But yeah, we need to have some type of repayment plan in place to have a monthly payment calculated.
And I'm more so speaking to the audience now at this point. The reason why I'm asking her these questions is because, as we know, or as I've mentioned to you guys on several occasions, and I will continue to talk about this, the deferment is going to officially be over as of next month, which is what, 2 days, a week, no, 2 days. Yeah, it's a week away, right? A little over a week. So it's over in September and they're going to expect payment within 30 days. And if you don't give them any payment within 30 days as of October, then they're going to start reporting your information to the credit bureau. So again, I'm asking her because I know I'm going to get hit. We're approaching the end of the year. People want to buy a house. And a lot of people, I don't think you guys are going to feel it until October hits. And I would hate for that to happen. So then you're going to come to me, hey, can you get this off? Hey, can you give me the IDR? Blah, blah, blah. So I need to match what she needs for you guys. So if she's saying, come to me first, give me all your documents, boom, I'll figure out what's what, because your student loan may not be an issue, or it may be an issue, or maybe I need somebody to, do the IDR. Maybe I don't, whatever. But at least we'll be prepared if I have to work quickly and fix something by October to get you in a crib by November, December at the latest. And another thing about an IDR, and a good thing about this, is everybody wants everything to happen quickly, right? Even though you've had ample time to fix things or whatever, no judgment. But the good thing is when you get on an IDR, it is within 30 days. So when I tell people I'll take care of your student loans in 30 days, it is literally 30 days because the Department of Education works that fast. As soon as that application is submitted and they receive it, the clock starts ticking And then I think 2 weeks after, they just send you a letter. Are you sure you can pull out? You know what I'm saying? But you got, if you are sure, then after that, 2 weeks later, you're done. They fix everything. So it is fast, but I just need to know what needs to be fixed that quickly. Right. And as far as me deleting it, it is, I try to tell people, make your student loan into a trade line, but after
Mhm.
you get the house, like focus on the house first. So you know what I'm saying?
Right.
If your mortgage
One
lender,
thing at a time.
yes, yes, you know what I mean? If your mortgage lender is like, yeah, let's take it off as much as it pains me, a house is more important than anything else after that. So yeah. So like I said, there's a reason why I was asking, and that's why. That's
Yeah.
definitely why.
And if you're communicating with your servicer, sometimes they say, "Oh, you have time. Oh, it's no rush.
Mhm,
Oh, you should wait. Just
mhm,
hold off. You're not due right now." And then boom, you start getting letters in the mail. So don't
mhm,
wait. Like that sense of urgency that you're sharing, Tamaya, is extremely important because,
mhm.
like you said, it'll be here before we know it. Get the documents ready, submit the paperwork, do the request now so that it's in place, and you're not stressing about that when it's
Mhm.
when it's due.
Now, another thing that's wrapping up, and again, I'm talking about this as well. It for some people, they were on like the COVID forbearance for their home, and that's wrapping up for some. And some people may have for a foreclosure on their credit report. Now, I already know I have to take care of that. It's a hard item. It's not simple to fix. However, if you see a forbearance, no, if you don't see a forbearance, do you go above and beyond to search for a forbearance? And the same thing with bankruptcies. Do you search for a bankruptcy even though it's not on the credit report? Do you look even further for them?
So, in my experience, the forbearance, um, typically it doesn't it doesn't show that it's a forbearance.
Mhm,
So what we see on our end when we pull credit, and if you've had a modification or a forbearance, is we see that gap in payment. So if
okay.
you've been making your payment every month and then all of a sudden it's like a 6 month window where there is no payment, it's like,
Mhm,
oop, what happened to the loan? What was going on? Right. So
mhm,
that's
mhm,
one indicator that tells us that there was some type of payment plan or arrangement. The other is there's typically language in the description under the loan that gives it away. So we don't dig for it, but there are a couple things that in the processing portion of the loan uncover that there might have been some changes or arrangements with the loan.
mhm,
For bankruptcy, same thing. For each of your accounts that were listed in the bankruptcy, or even if you kept the account while you were going through bankruptcy, but you notified the bank that you were going through a bankruptcy, they place a note on the account. So there's certain little things on the credit report that trigger it that we can tell whether it's listed or not. That let us know that there might have been some things that we need to ask questions about. And that's a part of the escrow process
mhm,
throughout that 25 to 30-day window. That's what the underwriters and processors are doing. So they're doing title research, they're doing research on the property to see what types of things are listed there. If there was ever a notice of default on the property, all of that typically comes up in that title research. So again,
mhm,
even if it's not something that we uncover as originators in the very beginning of the process, it's more than likely something that may actually turn up in the escrow part of the process. So you definitely
mhm,
want to be as honest as possible with your loan officer so that that way we can approach it head on, because
mhm,
underwriters don't like surprises. Like
mhm,
we don't
mhm,
want to be
mhm,
working on this file for
mhm,
15 days and then all
mhm,
of a sudden it's like, well, what's this? They didn't tell you.
yeah.
So we have a better outcome if we
Mhm,
can have that discussion in the beginning so we know exactly what to expect and condition it. And there's actually a disclosure declaration at the
mhm,
end of your credit, your application when you apply for your house, that ask you if you've had a bankruptcy in the last 7 years, what kind, if you've had any foreclosures, if you've had any legal suits. Here in the state of California, even a divorce is considered a legal process where we can't really make much change on a property. So if you and your husband are divorcing and y'all are both on that property, you have to complete your divorce before you can move on and look into some other real estate, because we want to see, we want to see how it happens, what goes down, right?
Yes.
So yeah, that declaration is about 12 questions, but it goes through all of those one-offs. So we uncover it, we talk about it, just to make sure that, like I said, at the end of it, there's no surprises.
So a few times through this conversation, you mentioned about having a letter of explanation, right?
Yes.
So I'm gonna give you,
favorite.
yeah. Well, when I came out here, I think I told you, but they don't know. But when I came out here, I moved from the East Coast, obviously, to the West Coast. And I left my corporate job, obviously, to have my own company. And they were like, okay, we don't see anything for like X amount of time. And then at the same time, though, it was COVID. I had 14 members in my family die because of COVID. So they were like, just write us a letter. And I said, are you sure? And they're like, yeah. I just wrote a letter explaining, and they approved me. Yeah, the lady was like practically crying. She was like, it's 14 members. I was like, yeah, but you know, it was COVID. Like, what could we do about it? So with that being said, with the letter, so with not to keep harping on bankruptcies, but a lot of my recent people are dealing with bankruptcy issues, and because of COVID, because of whatever, it's going to be more bankruptcies filed. And I'm trying to do another video to help people figure out, should you even file, especially if you're about, it's a whole thing. But anyway, what I wanted to ask you is, I have a few brand new clients that have bankruptcies. This one woman has two. She wants to sign up with me on Friday. She has two bankruptcies, and what's happening was they would they go to court, apply for a bankruptcy, maybe like reconsider it, and then like the next day pull out, right? They put it on their credit report anyway, the bankruptcy.
Those
and
notes.
So real talk, like the thank you, Miss Johnson. They won't remove it at all, right? Like I could get it off, but they'll go back to the court and say, hey, all we did was change our mind. Can you like get it off the credit report? And they don't. This is not like one or two people. This is like almost all my bankruptcy people. So you got a client, in their mind, they think I don't have a bankruptcy, right? Or it shouldn't be on there. So let's say they do your declaration, they're like, nah, I don't have a bankruptcy because it was discharged, but it's still showing. Would you accept a letter of explanation, even if it was new, like it was fresh, less than 2 years? I mean, a walk in and a walk out. How would y'all take that?
So the time frame, the 2-year time frame, is a Fannie Freddie regulation. So this is federally what they deem feasible for a time frame for a period for recovery. Personally, what I like to do is I sit and do a consultation. So what we do is we set everything up, we condition it for approval, and I actually submit it to my team to have it pre-qualified. And once they look at it, they can tell me whether this is going to pass and we have a chance to fight it with a letter of explanation, or whether we're not going to stand a chance. And again, that goes back to what was included, how far along we are with delinquencies, how many delinquencies, maybe accounts that they were managing very well that they were not planning to include in the bankruptcy. So again, a couple different factors depending upon their unique situation would determine if we have a leg to stand on or if we need to give it that 2-year window.
Okay. Okay. Thank you for that. And I also want to say, and I'm glad you brought up the fact that when you have bankruptcies, when you file for bankruptcy, it's not just the filing of the bankruptcy that shows up, but it's the accounts that they do clearly state. I forgot what the verbiage is, but it's a long sentence saying
Mhm.
it's under this chapter, this chapter, right? So just to let everyone know, if you are trying to purchase a home and you do have a bankruptcy and you're trying to get it off, it's less than 2 years discharge, right? Then you can come to me. I do get those additional accounts off the credit report as well. I don't just take the bankruptcy off because it just doesn't look right. It doesn't make sense for me to get your bankruptcy off and then you have like 10 accounts that say bankruptcy. So
Right.
yeah, I do get those off in case anybody is wondering. So cool. And I'm glad you addressed that because I don't think people think of that.
Yeah.
I have potential clients that didn't want to rock out with me because they were like, I just need you to get the bankruptcy off. And I'm like, yeah, but you have 15 accounts under the bankruptcy. I'm not paying
That's
for
still
that.
hurting
All
you.
right. Yeah, it's still,
Hmm.
it still got you. So, and then one more thing, I have a question of like my personal experience. I know things have changed. Things have changed drastically within the year, it seems like, with the mortgage industry.
Every day.
Even it feels like that. And I just moved out here and all of the houses here are new, like it's new construction houses, and people have moved out already, and it's like wow, wow. But
Yeah.
like I said, one of the things that got me was employment. So when I purchased my first home, I was ready to quit the corporate job as I was trying to get a home because my job was terrible, right? And every lender's like, don't quit your job, don't quit your job, wait till the day after closing, don't do it, right?
Put you
Like
to
my
keep. I
mortgage
don't care what
lender,
you do.
but see, my mortgage lender at that time, me and him were mad cool, and he
Okay.
was like, I will fuck you up. I said,
Right.
oh.
I'm gonna come find you. Don't you dare.
Ew. Oh, is that serious? I was like,
Is
but
that
I
serious?
was crying one time. I was like, I hate them. I want to quit. I want to do this credit thing. He said, wait. He said, I don't care what the hell you do after closing.
Yep.
So with that said, with the new house, I knew I couldn't do that. I was already after that threat. I got it.
You
But
do.
but there's situations when people they might get terminated or they can't take it anymore. You know what I'm saying? Like mine was bad. Like it was psychological, it was a whole lot. But if we're in the middle of the process of closing on a house, and if that were to happen, will a letter of explanation help at all?
So don't do that. Don't do nothing. Don't change your job.
Yeah.
Don't buy a car. Don't go on vacation. Don't use your PTO. Don't get sick.
Don't
Like
use the PTO?
don't
What if
because
it's near Christmas?
okay, so listen. So when you submit your application, we base
Yeah.
it off of if you work a 40-hour work week, we
Mhm.
need to see 40 hours earned. And on that pay stub, if you take vacation time, it's gonna show 16 hours, your
Mhm.
regular work hours, and then the
Mhm.
rest vacation. And then the
Mhm.
underwriter's asking me, where's your client? Like, did they go on vacation? Are they sick? Is it permanent? Like they freak out a little bit. So no vacation. If at all possible. Like I ask all of these questions in the consultation. I need to know what the next 30 days are gonna look like. So I'm prepared.
Stop.
So we're all seriously. I need to know what the next
Mhm.
45 days of our life is gonna look like so we can get you in this house. Okay.
Even with the holidays though?
And we can account for holiday pay, but don't fire yourself in the Bahamas, baby. I need you
Yeah,
here. Okay,
that's crazy.
so that's that.
Yeah.
Termination. If it is a downsizing of a department, we have a leg to stand on. The concern is the ability to repay now that you're out of this job. So if you're terminated, but you have another job in the same line of work, we can rock with that. I see that question. That's a great question. I'm going to come back to that. If you are in a situation where you're planning a transition, if you're planning that move because it's more income, we can rock with that, right? It's one of those case by case situations. We don't recommend it because any changes from the point when you submit your application all the way through to that closing, any changes can kick you out of escrow. It can change the approval, right? But if it's well thought out, if it's planned out, if it's something that I can address early on with the underwriters and let them know that this is what's going on, like for instance, a state move, okay? So you are living, you said Detroit?
Who, me?
Yes, before.
No, Philly.
Right?
Come on. I'm
Philly.
from Philly.
Sorry.
Oh my gosh. We have to do another video. Okay.
Right. Edit. Oh, it's live. Just kidding. All right. So you're like, okay, we're moving to Cali. Boom. So you start the application in Philly with that job. If they're going to transfer you, again, that's something that I can explain. So we're going to be transferring that job to California. So it's just about the consistency. So again, I started in banking. I was a teller and I relocated here and worked in commercial banking, retail banking. So it was a consistent move. But like I said, the biggest question that the underwriters are going to have is how are they going to make that payment? Was there another source of income? Was there some type of like supplemental job that they were doing on the side that we could use? In most cases, y'all, most of us, with inflation being the way it is, most of my buyers don't have just one source of income. And that's just the dynamic of kind of the weight of our dollar right now. Most people have, I got a 9 to 5 and a side hustle. So we document the side hustle so that way we can have a fallback. So
that came from the pandemic, though. The pandemic did it. A lot of psychological.
We don't trust it anymore.
Yeah. Real quick, because I know you have to answer DJ, and then but what if we're a salary employee? Because we should be able to take vacation. I know everybody's not salary. And then also, I was told you can leave the job as long as you're within the same industry.
Correct.
Yes. And you guys want to see how soon we're going to get hired. Like it has to be soon or something like that. Is that true? Okay, cool.
That is absolutely true. I need a hire date. This job, ABC company is going to hire me. This is my job title, and this is the amount that I'm going to be making on my new job. So yes, those are.
And all this will slow down the okay, all right, yeah. So you're trying to get a crib quickly.
Don't
move. Bear it, yeah.
Jesus. But we can do it. But again, now I need that offer letter from the new job. I need them to verify that information. And now we have to run numbers with the new income, which hopefully is more, not less than what you were making, right? And then we need the letter of explanation. So it just kind of adds to the list of things that they're going to review to get that approval.
Okay.
So, yeah. And then to DJ's question, are conventional loans better for first-time buyers? I hate to keep saying it's a case-by-case scenario, but it really is. Conventional loans are designed for first-time buyers or buyers that have that FICO score. You're coming in with a strong 640 or higher. you have a little savings set aside and you really don't have much credit issues or complications at all, conventional sounds like exactly what it is. It is a very traditional cookie cutter um, mortgage loan option. People historically shy away from FHAs, but they really do provide an environment for people with less than perfect credit. Um, the rates right now for FHA have been a little lower than conventional loan rates right now. And although it costs a little more because you have that additional mortgage insurance for the FHA, sometimes it allows for people to get their foot in the door. Like that DTI, we can work with that a little bit more on an FHA than a conventional. So it really is a case by case. And like I said, in that initial consultation that we do, I tell you this is the route that we're looking to go, and this is why. So we break that down to see, even as a first time buyer, is that the best option for you? So great question, DJ. Thank you.
Yeah. Thank you, DJ. He actually has another question. Do you offer preferred rates in any lenders?
I do. So as a broker, or my broker rather, I'm not a broker yet. My broker has access to over 80 lenders. So we have several investors to choose from, and we do rate shop to get you the best for whatever loan we're going after.
Okay. And could you I did it, but I don't think I did a great job with it. But can you leave in the comments your information and your way of contact for the people? And Miss Johnson has a question, and then DJ has another question after that for you.
Yes, Mrs. Johnson, I do offer commercial loan options. And the biggest difference from a commercial loan and a traditional loan is your traditional retail loan is going to be for a property that's going to be 4 units or smaller. So you have a single family, a duplex, a triplex, a fourplex, right? Those are traditional residential mortgages. A commercial loan is going to be anything that's 5 units or more. Okay, so we're looking at a multi-unit property, anything commercial that sits on a lot of land, anything that you're going to use for retail purposes in a retail zone. So a shopping mall, maybe it's something like they call multi-use. So you have a shopping mall in the front and then a residential in the back. All of those things are commercial. So I do have about 5 or 6 lenders that I work with exclusively just for commercial. The thing that I love about those options is we focus on how much income that potential property can bring you. So as opposed to like a regular home purchase where we focus on your ability to make that payment, we look at how much income that's going to bring to the new owner so that way we can get you approved. So thank you, LJ. That is a great question. And that actually leads up to DJ's additional question, that product type. So we offer, again, loan options anywhere from single family residences to multifamily or industrial. Even for renovation, I have a few renovation loan options. So if you wanted to get into rehabilitation, you wanted to buy a property, rehab it, and then flip it and sell it, I have a few options. I do not have specialty products. Right now, we do have a few commercials that will do gas stations, but not cannabis and data centers just yet.
Okay.
DJ, we need to talk.
Seriously, yes.
It sounds like we could definitely connect, just so that I can walk through some different options with you.
So yeah, and we'll still have your information in the description.
Absolutely.
I meant to answer you before when you asked where is this going to show. It's going to be on all my platforms. So it's going to be on my Facebook business page, my Facebook groups, YouTube, both of my YouTube channels, Twitter, all of that. Do I have Twitter? Yeah, Twitter. Twitter is gonna be on all my.
Thread. You got thread. We'll get you on thread.
Yes. Oh, I forgot. I got YouTube how to properly use it. I do have Thread. I don't know how to put stuff on Thread. Oh, and LinkedIn is going to be on LinkedIn. It's going
LinkedIn.
to be on Alignable. So it's going to be everywhere. So I definitely I already have your information, but when I posted it, it just didn't look, organized. So I'll do it again. But if you want to type it in just so DJ has it now,
Absolutely.
that would
And I'm
be
gonna
pretty
throw my
cool.
email in here too for y'all.
And I want to say thank you for definitely talking to us. This was really good. This was super super good. Um,
Yeah,
yeah, and if you could come back as often as you
absolutely.
want.
I'm here. I'm here. What I would love to is if you have any questions or scenarios, maybe some specific stuff that we can walk through.
Mhm,
I'm even down to get some scenarios together, maybe share my screen because I know I'm a
mhm,
hands-on kind of learner. So sometimes
mhm.
I need to see the numbers to make it make
Okay.
sense to put the puzzle together.
Mhm.
So maybe we can do that too. So we can do some hands-on stuff.
Okay. Yeah. Let's. So you sent that private. So let me.
Did I?
Yeah, it's all good. I got you.
Oh no.
It's all good. So this is Mrs. Johnson's information here, and it's showing up. Hopefully, y'all can see it. I put it in the comments like that.
Hey, there we
Yeah.
are.
Yeah, and when you don't see it, but when it plays, it's gonna show, and it shows. It literally showed on all platforms. But I'm gonna put it in the description for y'all. So definitely hit her up. If you have any questions, if you need to apply for a mortgage, do you want to put the link up as well too in the comments? And if you could send me, I think I don't know if the link I have is it, but just send me the link just in case if
Yeah, I'll send
anybody
it
needs
to
to
you.
apply. All right.
Yeah.
And again,
And
it'll be in the description.
I do like to have that consultation beforehand too, y'all. Just
Um,
so that way we can discuss numbers and kind of talk about what the process is going to look like. So
mhm.
don't be afraid to call, don't be afraid to text, so that way we can create a game plan. It does not have to be a right now situation. It doesn't have to be a traditional single family home with a white picket fence. Like we can figure out what's going to work for you and your family's needs.
And again, like I tell y'all all the time, your credit, I'm sure, is not that bad.
Right.
One of the reasons why I have Ashland on, and why I work so closely with lenders are most of the clients are looking for a home, and but they ask me mortgage questions and they ask me questions I can't answer. I'm going to be credit repair lady through and through. But working with a lender and having your consultation, they can look at your credit report and say, this is what needs to be done. And then we work together, right? Like the mortgage lender and the credit specialist work together. So I may look at your credit report and say, okay, I need to clean this out and make this look perfect. You're going to say, as a customer, I need to get in the house soon, right? So I ain't got time for that. And your lender's going to say, well, I just need these two items removed. If you
Right.
could either close them or get them removed, that's it. Somebody don't worry about anything else. And if you want to come back to her after you close, then fine, which does happen. People,
Right.
get their home and then they close. Everything has to be closed with me because you can't have an active dispute while you're going through the home buying process, by the way, right? So if you do get pre-approved and I got you where you need to get, then we have to stop everything immediately, right? But yeah, so we all work together. It's never as bad as you think it is. Bankruptcy, you just heard what she said about that. You heard what she said about getting a letter of explanation. There are ways to get your home. Okay. Don't be written out in these streets. Okay. You can have
Not
a
at these
foreclosure.
prices.
Psh, child, please. We already, we already had that
Earn that
conversation.
equity. Earn
Mm-hmm.
that equity. So every time you make your payment, a portion goes to pay down that principal. A portion of that goes to your equity. You're literally creating a savings account for your future. And then
Mm-hmm.
there's also the option for the reverse mortgage. So when you're 65, if you decide I don't want to work quite so hard, you can live off of the equity that you've created in your youth. So
Mm-hmm.
we can do this for hours, y'all. The point of
Yeah.
the situation is reach out, get help from a professional because you never know.
Mm-hmm.
You're way better in a way better situation than you think.
Yeah, for sure. But yeah, well, again, thank you so much. Thank you, a million thank yous. And
Thank
I look
you.
forward to working with you and having you back on the podcast.
Absolutely. I love it. Thank you so much.
You're welcome. So I'm going to wrap this up. You guys, you have a good one. Again, thanks for hopping on Coast to Coast Credit, and we will talk to you later. Bye bye.
Bye.